Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll discuss one question on profit reconciliation statement covering various elements of typical nature. Let us start reading the question. The net profit of company amounted to rupees 60,412 for the year ended 31st December 2013 as per its financial record. So this is profit as per financial book. The cost record revealed the different figure. Amount they have not given. Here they say that cost book profit is not same. It's a different figure. A scrutiny of the two sets of account disclose the following facts. Works overheads, factory overheads recovered in cost account during the period amounted to 28,450, while actual amount of this expense in financial book 21,390. So this is as per financial book. This amount is as per cost book. Actual office expenses, administration overheads for the period were rupees 19,850. So this is figure as per financial book, where office overheads recovered in cost account rupees 14,500. This is as per cost book. The annual rental value of premises owned by the company amounting to 10,800 were charged to cost account but not in financial account. So this is nothing but amount of notional rent. Now what is notional rent? This rent is not actually paid but if you take similar premises on rent, you are required to pay rent. So that rent is calculated and recorded in cost book on a notional basis, which is called as notional rent, to be recorded in cost book only. Selling and distribution expenses for the year amounted to 16,490. This is as per financial book, were excluded from costing records. Excluded means here it is not recorded at all. Excess depreciation charged in cost account 2,400. This is as per cost book. Expenses not included in cost account and shown in financial account. Interest on loan, bank charges, directors fees. These are all as per financial book. Penalty due to late completion of contract. This is an expense recorded in financial book only. Gains during the year not included in cost account. Transfer fees, profit on sale of investment, interest on investment. Transfer fees is share transfer fees, that is income recorded in financial book only. So these incomes are also recorded only in financial book. The following appropriation had been made before arriving at the profit figure of 60,412 shown above. So these are the items of appropriation. Transfer to dividend equalization fund. This is recorded only in financial book. Transfer to income tax reserve, recorded only in financial book. Transfer to debenture redemption fund, recorded only in financial book. A sum of rupees 10,000 given as donation to Prime Minister Relief Fund has been charged to profit and loss account as business expense. So this will be recorded only in financial book. Prepare a reconciliation statement and find the amount of net profit or loss as per costing records. We have gone through the question. Let us prepare working note. While preparing working notes, we are required to take one care. Our profit reconciliation statement will start with profit as per financial book, because that is the profit given in the question. So our first column will be financial book and second column will be cost book. Works overheads recovered in cost account during the period 28,450, while actual amount of this expense was 21,390 only. So first expense we'll consider works overheads. In financial book, 21,390 actual amount paid. In cost book, recovered 28,450. Actual office expenses 19,850. In cost book, office overheads recovered 14,500. The annual rental value of premises owned by the company 10,800 were charged in cost account but not in financial account. Notional rent of own premises will not be there in financial book, it will be there in cost book. Selling and distribution expenses for the period amounting to 16,490 were excluded from costing records. $16,490 recorded in financial column. In cost book it is excluded. Excess depreciation charge in cost book 2,400. Expenses not included in cost account and shown in financial account. Interest on loan 1,600. Bank charges 160. Directors fees 750. Penalty due to late completion of contract 2,500. Gains during the year not included in cost account. Transfer fees 45 rupees. Profit on sale of investment 4,250. Interest on investment 9,450. Transfer to dividend equalization fund 10,500. Transfer to income tax reserve 6,400. Transfer to debenture redemption fund 9,000. A sum of rupees 10,000 given as donation to Prime Minister Relief Fund has been charged to profit and loss account as business expense. So we have considered all items of expenses and incomes which are responsible for disagreement of profit as per cost book and financial book. Now we will be completing working note. What we are required to do here, from first amount column we are required to deduct amounts in second amount column. Here we got minus 7060. So in profit reconciliation statement, this item will be deducted. Plus 5350. So this will be added in profit reconciliation statement. Notional rent 0 minus 10,800. It will be minus 10,800. Selling and distribution overheads 16,490 minus 0 plus 16,490. Excess depreciation in cost book 2,400 minus 2,400. Interest on loan 1,600 minus 0 plus 1,600. Bank charges 160 plus 160. 750 directors fees plus 750. Penalty due to late completion of contract 2,500 plus 2,500. Transfer to dividend equalization fund plus 10,500. Transfer to income tax reserve plus 6,400. Transfer to fund 9,000 plus 9,000. Donation to Prime Minister Relief Fund plus 10,000. Now in case of income, we are required to reverse the sign. Transfer fees, here we get plus 45, we have to take minus. Profit on sale of investment plus 4,250, we have to take minus. Interest on investment plus 9,450, we have to take minus. So we have fixed the signs for all the items. Now we can prepare profit reconciliation statement. We have only profit as per financial book. We'll be starting with that profit as per financial book, so that we can arrive at profit as per cost book. Now we'll be using working note to add and subtract items. Office and administration overheads to add 5350. Selling and distribution overheads 16,490. Interest on loan 1,600. Bank charges rupees 160. Directors fees 750. Penalty due to late completion of contract 2,500. Transfer to dividend equalization fund 10,500. Transfer to income tax reserve 6,400. Transfer to debenture redemption fund 9,000. Donation to Prime Minister Relief Fund 10,000. Now we'll be considering the items which are to be deducted. Works overheads 7,060. Notional rent of own premises 10,800. Excess depreciation in cost book 2,400. Transfer fees 45 rupees. Profit on sale of investment 4,250. Interest on investment 9,450. As per working notes, we have recorded the items. Now we have to add all these items which are positive numbers. Similarly, we are required to add all these negative numbers. Profit as per financial book is 60,412. To this we will be adding this value. From this we are required to deduct this value. So we got profit as per cost book rupees 89,157. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.